Hello and welcome to India Business Hour. I'm Shireen Bhan. The headlines that we're tracking for you this evening.
Fellow Americans, this is Liberation Day. Waiting for a long time. April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed.
President Trump unleashes the reciprocal tariff blitz, imposes higher-than-expected tariffs on many countries, including 34% tariffs on China, 20% on the European Union and 46% on Vietnam. Says these numbers include a baseline tariff of 10% that comes into effect on the 5th of April. Russia, Canada and Mexico not on the list. European markets tumble, Asia feels the heat. The Trump administration imposes a higher-than-expected 27% levy on imports from India. Commerce Ministry says it is carefully examining the implications, adding that talks to seal a trade deal are underway. India's textile and electronics exports could get a leg up as competitors China, Vietnam, Indonesia and Bangladesh face relatively higher US tariffs. Pharma gets an exemption for now. Gems and jewelry industry terms the new levies a significant burden. From anger and outrage to emergency meetings, Trump's tariffs evoke a slew of reactions across the world. China calls for Washington to immediately cancel the tariffs, warns that they endanger global economic development. South Korea promises an all-out response. Australia calls the tariffs a hostile act against an ally. EU is preparing a fresh package of countermeasures. Indian equities opened sharply lower as India wakes up to 27% tariffs but recover, ending with modest losses. The sensex and the nifty close less than 0.5% lower. Pharma stocks lead the gains. IT, auto and metal stocks remain under pressure. The rupee erases early losses to end slightly stronger against the dollar. Indian startups need a reality check, says Commerce Minister Piyush Goyal. Says Indian startups are focused on food delivery and hyper-fast logistics that turn unemployed youth into cheap labor, while Chinese startups are involved in semiconductors and robotics. Adds that having just 1,000 startups in the deep tech sector is disturbing. Bajaj Finance gets a letter of displeasure from the RBI over lapses in its co-branded credit cards business. Sources say the letter points to the company's lack of proactive approach in identifying gaps and vulnerabilities and a failure to maintain adequate internal controls. All judges at the Supreme Court agreed to make the declaration of their assets publicly available. The disclosures will be made to the Chief Justice of India and will subsequently be uploaded on the Supreme Court's official website. The move comes after unaccounted cash was allegedly found at the residence of former Delhi High Court Judge Yashwant Verma. Setback for the West Bengal government. The Supreme Court upholds the Calcutta High Court order scrapping the appointment of 25,000 teachers to schools run by the state government. The apex court rules the appointment process is tainted beyond repair. The Karnataka High Court refuses interim protection to Elon Musk's social media platform X. The Indian government stands firm, saying all social media companies must comply with the law. X argues that the law is unclear. Lok Sabha approves the resolution to impose President's rule in Manipur after a 40-minute debate in the early hours of April 3rd. The government moves the motion at 2 in the morning despite protests by the opposition. Home Minister Amit Shah calls the unrest caste violence due to interpretation of a High Court order. Adds there has been no violence in the state since December. Rajya Sabha discusses the new Waqf bill a day after it crosses the Lok Sabha hurdle. Opposition alleges the government is resorting to cultural vandalism, questions the intent of the bill. BJP's JP Nadda defends the bill, saying if Muslim nations can make Waqf property transparent and digital, why not India?
My fellow Americans, this is Liberation Day. We will establish a minimum baseline tariff of 10%. India, very, very tough, very, very tough. Prime Minister just left. He's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. China, 67%. That's tariffs charged to the USA. We're going to be charging a discounted reciprocal tariff of 34%. You think of European Union, very friendly. They rip us off. 39%. We're going to charge them 20%.
We're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail.
We're going to fight these tariffs with countermeasures.
The administration's tariffs have no basis in logic and they go against the basis of our two nations partnership. This is not the act of a friend.
Fear and fury, dilemma and dismay. Countries across the world are coming to grips with Donald Trump's reciprocal tariffs, one that upends decades of America's support to globalization and potentially has the power to disrupt and rearrange global trade as we know it. Trump unveiled sweeping tariffs. The levies were bigger than what was expected. Let's quickly take you through the 5 big takeaways. Trump announced what he calls discounted reciprocal tariffs during a long drawn-out speech at the White House lawns. Now, several countries, including China, Vietnam, EU, Japan and India stare at tariffs that range anywhere between 20 to 40%. That is the tariff range. India specifically faces a 25% tariff levy. As per the Trump administration, the rates were calculated as roughly half of what the US claims these countries impose on American exports, also factoring in non-monetary barriers and non-tariff barriers. Among others, India's Commerce Ministry says it is carefully examining the implications. So what does all of this mean for India Inc.? India's pharma sector can breathe easy for now as Trump's tariff strike exempts the sector. IT and jewelry sectors, however, staring at a backlash. From anger and outrage to emergency meetings, Trump's tariffs have evoked a slew of reactions across the world. China calling for Washington to immediately cancel the tariffs, warning that they endanger global economic development. The EU is preparing a fresh package of countermeasures. Let's take a look at the global reactions to Trump's tariffs that have come in so far.
For these reasons, starting tomorrow, the United States will implement reciprocal tariffs on other nations. It's been a long time since we even thought of that. We used to think about it a lot. We didn't think about it for many decades, and you see what's happened. For nations that treat us badly, we will calculate the combined rate of all their tariffs, non-monetary barriers, and other forms of cheating. And because we are being very kind, we're kind people, very kind. But we will charge them approximately half of what they are and have been charging us. So the tariffs will be not a full reciprocal. I could have done that, yes, but it would have been tough for a lot of countries. We didn't want to do that. But such horrendous imbalances have devastated our industrial base and put our national security at risk. I don't blame these other countries at all for this calamity. I blame former presidents and past leaders who weren't doing their job. They let it happen, and they let it happen to an extent that nobody can even believe. That's why, effective at midnight, we will impose a 25% tariff on all foreign-made automobiles.
Well, that is President Trump announcing the tariffs. Donald Trump there passing the buck to former presidents for carrying on what he calls a calamity. Our colleague Sanjay Suri joins us now from Washington, D.C. Sanjay, Trump says he wants to restore the golden age. Give us a pulse check of how the U.S. is responding to Trump's tariffs.
You know, for a start, Shireen, if April the 2nd is to be the economic equivalent of July the 4th, it hasn't shown. There has been no sign of celebration, not here in Washington, D.C., not anywhere in the U.S. There is, in fact, on the contrary, a sense of misgivings and apprehension over the consequences of this. And the consequences that are feared first are inflation, then shortages, then the fact that if the free flow of business and industrial produce gets disrupted, this is going to have knock-on effects down the line, and not everyone is really buying the Trump rhetoric that we've been hearing. And so even businesses have been very apprehensive. There is no sense of excitement. The markets in the U.S. have been down. The growth forecast has been cut by the Fed from 2.1% to 1.7%. There is fear of recession, and Trump has not ruled that out. This is the scene here in the U.S., and it is not, Shireen, a scene of excitement.
Well, clearly not a scene of excitement there, as Sanjay Suri pointing out. Many thanks for joining us there from Washington, D.C. Meanwhile, China and European Union are gearing up with their own toolbox to retaliate. The EU says it's preparing a fresh package of countermeasures, while China has vowed retaliation. Eunice Yoon, Sylvia Amaro get us more on Beijing and Brussels' likely game plan. Ladies.
China's Commerce Ministry has vowed to take resolute countermeasures, taking into account the tariffs during President Trump's first term, as well as the 2 rounds since he's taken office. The effective rate now for the U.S., for China, in terms of tariffs, is around 70%. So in addition, President Trump had announced plans to close a trade loophole on May 2nd. This is one that had been benefiting e-retailers such as Temu and they were able to send their goods duty-free. That's not going to happen anymore. The expectation is that China is not only going to use counter tariffs to retaliate, but also to use its expanded retaliation toolbox. So that means tighter controls potentially for certain items like critical minerals, also punishing individual American companies with blacklisting or more investigation.
So what we're expecting at the EU level is that the European Commission will be developing countermeasures in response to this new round of tariffs from the United States. Earlier this week, we heard from Ursula von der Leyen, the President of the European Commission, and she said that they are preparing, quote, a strong package of measures, and these could actually hit digital services, in particular US big tech firms.
We are prepared to respond. We are already finalizing the first package of countermeasures in response to tariffs on steel. And we're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail.
The bottom line here is they do not want a trade war with the United States, but for the time being, they see no other solution than retaliating.
Sylvia Amaro, many thanks for joining us there, getting us the perspective from EU and the retaliatory measures that we can expect. Now, as nations react to the latest round of the US tariff announcements, one number has raised eyebrows: Trump's claimed tariff rates which countries impose on US imports. Now, let's take a look at India's case. It's been claimed that it's a very high 52%. But Prashant Nair joins us now to help us understand how the US has arrived at that 52% number. Prashant.
The formula used to arrive at the 52% number is not based on actual tariff lines. Instead, it was based on a broad proxy. The formula goes something like this. Actually, the formula is this: US trade deficit with country X divided by US imports from country X gets you that figure. And once calculated, this number has been divided by 2, resulted in the so-called discounted reciprocal tariff. Let's specifically look at India's case. US trade deficit with India, $45.7 billion. US imports from India, $87.4 billion. Divide 45.7 by 87.4, and there you have it, that 52% number. The natural question is, why was this done? The official US explanation, and this came from USTR earlier, and I quote, individually computing the trade deficit effects of tens of thousands of tariffs, regulatory tax and other policies in each country is complex, if not impossible. The combined effects can be proxied by computing the tariff level consistent with driving bilateral trade deficits to zero. In other words, it's a back-of-the-envelope economic proxy, not a customs handbook. While that is the official US explanation, most market participants see differently. They see this as a deliberate sort of highballing, a maximalist sort of starting point meant to pressure countries into concessions and force a lowering of non-tariff barriers, basically reframe the global trade narrative around, of course, US leverage. While the headline number may be debatable, the strategic intent, I think, is pretty clear for everyone. Reset the rules of engagement and reshape global trade around American industrial and geopolitical interests. Back to you.
Well, many thanks, Prashant, for explaining the tariff calculation and how the US has arrived at those tariff numbers. And that certainly was something that was puzzling people through the night and early this morning. And of course, then the clarification coming in from the USTR. Now, the Wall Street ended the day mixed as investors digested Trump's tariff measures. The Nifty and the Sensex ended with minor cuts, while the broader markets outperformed the blue chips. Pharma and industrial sectors kept the Nifty's losses in check, and that is because pharma has been left out of the tariff basket for now. The Nifty IT index was the biggest loser among frontline indices over fears that Trump's tariffs could slow discretionary spending in America. Remember, this was a sector that was talking about the possibility of explosive growth on the back of deregulation in America and what that could potentially do for spends as far as IT is concerned, and that sector being hammered today. But India's gems and jewellery industry may also suffer a setback. The US market accounts for about 30% of India's exports from the sector. Hormuz is standing by with a pulse check of what the tariffs mean sector by sector. Hormuz.
A fairly resilient reaction coming in from the Indian markets today, and considering how the start was supposed to pan out, you would take this session with both hands. But as the session went by, there was a very clear demarcation between the winners and the losers of Donald Trump's tariff announcements, the 27% reciprocal tariffs that were imposed on India. And Donald Trump mentioned that he had mentioned to PM Modi that although he's a very good friend, you don't treat us well, and hence we'll be charging you half of what you charge us, and hence the reciprocal tariff imposition. But one of the sectors that took a beating in today's trade was IT, and it was the mid-cap IT stocks that took it on the chin in today's session, be it Persistent, Coforge or KPIT Tech, falling up to 10%. And it is not because of any tariff-related concerns, but because of this tariff imposition, the rising fears of a recession in the United States, which is a key market for these IT companies, is the result of why these stocks took a beating in today's session. Another sector that took a beating, we don't talk about that sector that much, were the shrimp exporters, and it was stocks like Avanti Feeds and Apex Frozen Foods that at one point were down almost 18% in today's trade. India, of course, is one of the largest shrimp exporting countries to the US, and Incred Research has analyzed that in case these tariffs remain in place, the shrimp import duty will now rise up to as high as 45%, so a negative reaction for these shrimp exporters as well. And some of the winners, though, in today's session, one very clear winner was the pharma sector, and it was the Nifty Pharma Index that was an outperformer today. Most of the stocks ending higher, although off the highs of the day, but still ending higher. The question only remains is for how long, because there are investigations that are in progress, and that leaves the window open for any future tariff levy on the pharma sector. And lastly, another winner that emerged in today's session was the garment and textile companies, be it the likes of Trident, be it the likes of Arvind, Gokaldas Exports, all of them seeing healthy gains in today's session. And that's not because they were exempt from any form of tariffs, but the competitive nations were the ones that were charged a lot more in comparison to India, be it China, be it Vietnam, be it Bangladesh. All of them charged anywhere between 40 to 50% in terms of reciprocal tariffs. So that gave India a competitive advantage, and that is why you saw healthy gains in these names. So clear winners and losers. It'll be interesting to see how this trend sustains from here on.
Hormuz, many thanks for joining us. And through the day, we've been speaking with India's top industry bodies to get their reactions to the reciprocal tariff announcements. The apparel export body said order cancellations and discount demands began last week and have escalated after the tariff announcement have come in. The representative from the Indian medical device industry body said that India could benefit as the US is looking to shift away from China and Mexico in this sector, but in the near term, they do expect pain on account of it. Take a look.
What is happening here is the US importers, they've already started asking for discounts and cancellations. Now, this is a big issue for us, and this needs to be addressed by the government. They have to take it up with the government there, or, like China did, when 10% tariff was imposed on China, many retailers, they started pushing manufacturers to reduce prices.
It looks slightly detrimental to us, but I think business people have to look for windows of opportunity, because unlike apparels where you can move things around very rapidly, for quite some time, USA has been looking at diversifying its supply chain of medical devices to address its healthcare security needs, like India has been doing also post-COVID. So I think that is more strategic in mind.
Our fear is that there are other FTAs now in the on the table, and those countries should not use whatever concessions we give to the US as a benchmark for discussions, because that doesn't safeguard the interests of our members and our industry.
I don't see any major near-term impact, except for the fact that whatever exports we do to United States, almost like $12 billion of electronics, if there is a short-term demand reduction in US because of the prices going up for the consumers, that's the only impact I would see. But India is well placed as of now compared to the other electronics and semiconductor exporting countries, such as China, Vietnam, Taiwan, Thailand, as well as Mexico,
there's going to be no impact because the two competing nations, which is China and Vietnam, have got a higher tariff, Vietnam at 46% and China at 54%, which is that the 10 of February and March 25, and the 34 on top of that. So because of that, we'll not have an impact. The impact could be in terms of shrinking of demand in the US, which is possible.
Former Foreign Secretary Shyam Saran, meanwhile, says that there could be an opportunity for India. However, he also says that India must make efforts to expand exports, increase competitiveness and address quality issues. Speaking to my colleague Parikshit Luthra, the former Foreign Secretary said that trade diversion to India will not be as automatic as it is being projected. Take a look.
So the focus has been very much on these Asian countries. And of course, top of the pile is China with possibly a tariff rate which will come to something like 54% if you take the 20% initially and now 34% being added to that. Could there be some diversion of trade towards India? Those possibilities are there, but I do not think we should take it as a given. We will still have to work to make sure that our goods are competitive compared to other partners.
Right. Do you feel that these tariffs also bring an opportunity for India? What is also being said by certain market observers that if Chinese tariffs on China is almost as high as 54%, 37% on other nations, India gets a chance to probably become a bigger exporter to the US because India's goods will be cheaper compared to other jurisdictions. Do you think that argument makes sense? Are we going to see that happening?
So as I just mentioned, there could be those opportunities, but it is not something which is a given. It still requires India to make efforts to try and expand our market share, to become more competitive. There will be quality issues involved. To merely think that there will be necessarily a trade diversion towards India, I don't think that is a correct assumption. We should focus much more on how we can make our domestic economy more competitive. We should be able to, address some of the very major quality issues that our exports have. There are issues relating to logistics. So, to think that somehow because China has a bigger tariff on its products, therefore necessarily there will be a diversion towards India, I don't think that is a correct assumption to make.
And you can catch that entire conversation with the former Foreign Secretary Shyam Saran on our special broadcast Trump Watch at 9:30 p.m. right here on CNBC TV 18. Up next on India Business Hour, Indian startups need a reality check, says Commerce Minister Piyush Goyal. That and more when we return. And you can catch all of CNBC TV 18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. You're watching India Business Hour. Bajaj Finance has received a letter of displeasure from the RBI over lapses in its co-branded credit cards business. Sources say the letter points to the company's lack of a proactive approach in identifying gaps and vulnerabilities and a failure to maintain adequate internal controls. Commerce Minister Piyush Goyal has said that Indian startups need to introspect on the sectors they choose to focus on. Speaking at the Startup Mahakumbh 2025, Goyal said that startups are focused on food delivery and hyper-fast logistics, while Chinese startups are involved in semiconductors and robotics. He added that having just 1,000 startups in the deep tech sector is a disturbing situation. Take a look.
We are focused on food delivery apps, turning unemployed youth into cheap labor so the rich can get their meals without moving out of their house. And against that, what does a Chinese startup do? Work on developing electric mobility, battery technologies, and with that, they're today dominating the electric mobility ecosystem. We are very proud of what India has done. But are we the best in the world as yet? Resources are going only towards hyper-fast logistics. And look at what the other side is doing. robotics, automation, machine learning, preparing themselves for 3D manufacturing.
Well, that's the Commerce Minister there at the Startup Mahakumbh. All judges in the Supreme Court have agreed to make the declaration of their assets publicly available. This comes in the wake of unaccounted cash being allegedly found at the residence of former Delhi High Court Judge Justice Yashwant Verma. But what does this mean? Ashmit Kumar joins us now to explain. Ashmit, to start with, we have no clarity yet on what has finally happened in the Justice Yashwant Verma matter. And secondly, this is not the first time that the Supreme Court has spoken of making assets publicly available.
Indeed, it's not the first, and the fine print is in fact what makes it more important. Yes, indeed, there has been a full court resolution where the Supreme Court, 33 of them Supreme Court judges have decided to declare their assets. But what does that mean? That means is that a judge on taking charge as a Supreme Court judge at that time has to declare the assets to whom? Well, to the Chief Justice of India. The fact that there needs to be a disclosure to the public on the Supreme Court website is only secondary. And what's important is that there's a massive caveat attached to it, that it's voluntary. It's entirely voluntary in nature. What that effectively means is that even as we speak, there are 33 judges in the Supreme Court. 30 of them have declared their assets to the Chief Justice of India. None of them have declared it on the website, at least not as of right now. That's, in fact, one of the core concerns that was, in fact, that has been raised by many as a part of previous resolutions as well. 1997, we've seen a similar resolution. 2009, we've seen a similar resolution. They all had the same caveat that it was voluntary in nature, and therefore very rarely have we seen Supreme Court judges being forthcoming and declaring their assets on the Supreme Court website. Having said that, all of this, of course, does come in the wake of the Justice Verma controversy with cash being discovered at his residence. What's interesting and ironic, however, is that the Delhi High Court, where Justice Verma was working, the Delhi High Court website, in fact, has 4 sitting judges who've declared their assets. That's 4 more than the Supreme Court.
All right, Ashmit, appreciate you joining us. Staying with court action, the Supreme Court has upheld the Calcutta High Court order cancelling the appointment of 26,000 teachers and non-teaching staff made by the West Bengal School Service Commission in 2016. The court directed the state to conduct fresh recruitment within 3 months. The bench, led by Chief Justice Sanjeev Khanna, has declared that the entire recruitment process was tainted and lacked credibility. The Karnataka High Court has refused interim protection to Elon Musk's social media platform X. The Indian government has stood firm, saying that all social media companies must comply with the law. X argued that the law is unclear. The Lok Sabha has approved the resolution to impose President's rule in Manipur after a 40-minute debate in the early hours of the 3rd of April. The government moved the motion at 2 in the morning, despite protests by the opposition. Home Minister Amit Shah called the unrest caste violence due to interpretation of a High Court decision. He added that there's been no violence in the state since December. The Rajya Sabha has discussed the new Waqf bill a day after it crossed the Lok Sabha hurdle. Opposition alleging that the government is resorting to cultural vandalism and questioned the intent of the bill. BJP's JP Nadda defended the bill, saying if Muslim nations can make Waqf properties transparent and digital, why not India? And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching, but remember to stay tuned to CNBC TV 18. We continue to decode the Trump tariffs and its impact and implications, not just on India, but the global economy. And of course, we go straight across to Wall Street and continue to bring you all the action from the US market. So stay tuned to CNBC TV 18 for the global edge.